Good morning, folks. This is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our daily fundamental video. What am I looking at in the market? Well, I'm more focused on the green color today. Why? Because European markets are trading to the upside. And folks, the reason for that is because investors and traders, they are trying to back some bargains. Why? Well, the European markets had one of the worst selling day yesterday, going back all the way to July. Now, speaking of the selling and speaking of this massive sell-off that we have seen, when I look at the Dow Jones and the S&P 500 index, and what I see is 4 consecutive days of losses. Now the question is, when was the last time that we have seen such a long pattern of losses? Folks, I had to go back all the way to March and look at the price action there, and it was pretty clear that since March we haven't seen 4 consecutive days of losses, especially for the US indices and therefore the Dow Jones and the S&P 500 index. But what is really worrying me in relation to the Dow Jones and the S&P 500 indexes, that both of these indices have violated the 100-day SMA. As you can see on the chart, the Dow Jones index crossed below the 100-day simple moving average on the daily time frame, and today the futures are still trading to the downside by well over 50 points. So meaning it is the chances are that we may challenge the 100-day moving average once again, because the price is already trading below that 50-day simple moving average on your daily time frame. And the situation is very similar for the S&P 500 index. As you can see in the chart, the index is trading below the 50-day moving average and also violated the 100-day SMA. So this raises concerns for us that, okay, what does this really mean? Are we heading to the downside? Are we heading to the upside? What does this mean for the market? Well, if we break below the 100-day SMA, the chances are we will continue our journey towards the 200-day SMA. Why is that important and how that can really happen? That is the question, my friend. The answer to that is very simple. If these virus fears continue to mount and the current targeted lockdown changes into national lockdown, forget about 200-day SMA, then we are moving towards COVID-19 crash levels. And that is very possible if national lockdowns are reintroduced. But for the time being, they are not likely. Why? Because the UK government today announced curfew. And when I was listening to the news announced by the UK government, so basically what is going to happen, by 10 p.m. all restaurants and bars will be forced to shut down their operations. Of course, it is going to have an adverse influence on the economy, and that means retail and hospitality sector is likely to continue to suffer more. And that means FTSE 100 index is going to continue its journey to the downside. But what about the Andrew Bailey's comment? Because I was also listening to them earlier. What he said today, he very much, folks, downplayed the prospects of negative interest rates just on the basis of virus surge. So basically, in a very simple terms, what we are looking at with respect to the Bank of England, if we do see Brexit, if Brexit happens with no deal, I mean Brexit is going to happen, but if Brexit takes place with no deal, then negative rates are solidly on the table. But if we have a deal, then forget about negative interest rate in the UK. That is not going to happen. And finally, it is all about the precious metal. That metal crossed, I'm talking about gold now, the metal crossed that critical level of 1900, but it still stayed above that critical 100-day SMA. And so that is assuring me that there is still something left in this particular bull rally, because our prices jumped back above the 1900. Now, what we need to see with respect to the gold market is, firstly, the prices need to stay above the 100-day SMA on the daily time frame. Secondly, we definitely firmly need to stay above the 1900. We don't want it to see consolidation between 100-day SMA and below the 1900 level. That's likely to be very bearish for the gold prices. That's all for today, folks, and I'll see you guys next time.